Accenture. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we can find it here under economic signals, and it's under consulting. So we see an average 80% here from the low. Yeah, pretty good, and approaching a minus 8-ish% pullback. So here is Accenture, 61% gain and a minus 2-ish% pullback. So here is their website. Sustainable organizations creating lasting, equitable impact for all stakeholders. Yeah, 360 value in every direction. Yeah, so it's a very classical, signals of change, consulting website. Okay, so let's here jump into the charts. So this is weekly data points and a lot of data, and you can see that the bulls have very clearly been in charge. Huge move. Now when we go here and look at some of the indicators. So here is also the distance from the purple 20-week, 50-week, 100-week, and the 200-week moving averages. You see that the current distance from these moving averages is very, very, very high. If you look at what usually happens here, if you look at some history, let's go back to this situation, then we did get the pullback. This situation, we did get pullback to the purple 20-week moving average. If you look at, here we had some extreme readings and we did get, a pullback. Now looking here also at, the RSI. Throughout the history of this company, it is very rare for us to have this RSI or higher. We had higher RSI here, but that eventually resulted in one of the deepest corrections we have seen outside of bear markets, global bear markets. So here Accenture collapsed to minus 24%, which is definitively bear market territory. Looking here also at the weekly MACD, we have extreme readings. So the bulls are definitively in control, but we have readings that are just obscenely euphoric. And bull markets, they do die on euphoria. Here are the daily data points. Distance from the 200-day, 100, 50-day moving average is high. We have seen a little bit of a cool down here. If we zoom in here on the daily data points, it certainly seems here, when you look at the latest candlesticks, that the bulls have trouble in this region. They clearly seem to just run out of buyers. Does that mean that this is the high and that there's this spectacular shorting opportunity? Well, obviously, you have to be careful, but given the data we have seen, especially the weekly data points, we have extreme bullish readings. Historically, it has been a good time to consider some bearish trades. If you look here at the seasonality over the last 5 years, sharp decrease in strength into October. Over the last 10 years, we also have this sharp drop from September to October, but November is strong. And here over the last 20 years, we do see that October is one of the weaker months, though November is strongest. So that sort of complicates a bit the bearish thesis. We do see here that January is the weakest month. So it is possible that the great short opportunity is going to come in November. The problem with seasonality data is that other people are watching it. So you always have the risk that people are going to look at seasonality data and then actually start selling, before the strongest months, because because the market is forward looking and people want to be ahead of the curve, and that is one of the complications with seasonality data is that it can shift, not because of the inherent dynamics of the business, but simply because investors do want to get out and in at the best time for themselves. So that's how you can get those situations where the monthly seasonality just shifts a bit back and forth. Okay, looking at Finviz here, we do have some price targets. If you look here at a bit more well-known name, BNP Paribas, they do have a $335 price target, and you see here that everyone has a lower price target than the current stock price, except here for MoffettNathanson. I haven't heard about them, so I think that we need to lean a bit more towards these well-known analysts like Jefferies, Bank of America, like Wells Fargo, because the rest of them, they do have lower price targets. If you look here at Sachs, number 3 hold, C value, A growth, A momentum, VGM of A. Industry rank, top 9%, 1% dividend. So we do have some mixed data here. When we look at the weekly data points, they very clearly send an extreme message. When we look at RSI and the PPOs, which measures distance between price and these key moving averages. Historically speaking, when we have these very high levels, we tend to see very substantial corrections. If we go back here, the last time we were this far away from the blue 100-week moving average, that is this event over here, and if we do zoom in, we did see a very, very, very substantial correction. We almost tried to test the blue 100-week moving average. If we measure the correction from the high to this low, minus 26-ish%. And it was when things looked, peak bullish that we did see that deterioration. So it goes to show you that the best thing is to just buy low and sell high, because at these very spiky levels, that is when there's extreme risk. And given that we have a all-time record here on the MACD, we just have to accept that the current event is an anomaly. And when you are dealing with an anomaly, you need to act accordingly. So yeah, I do think that the best trade most likely on the horizon here will be bearish for Accenture, because these are just absolutely ridiculous readings, but you always want to have some stop in place.